Hi everyone, out here to do a review for a company called Replace Your Mortgage. What Replace Your Mortgage does is it teaches you how to do what's called velocity banking and infinite banking concepts, or IBC. And what that is the velocity banking is instead of using a traditional mortgage for your home, you use what's called a first lien HELOC, which stands for home equity line of credit. So to really simplify that, what that means is you take your income and instead of putting it into a bank account that's making like what 0.15% interest or roughly right now, and you take that money, you put it directly into your home equity line of credit, because a home equity line of credit is an open-ended mortgage or loan to where you can put money in and you can take money out of it. So you put your income into that HELOC instead of the bank, and then as you're waiting to pay your monthly bills, the longer that money sits in there, it drives down your daily interest accrual. And basically, across the country, most people that have a 30-year mortgage can actually pay off their mortgage in 5 to 7 years. And it's not magic, it's math, and it makes sense, and it actually works. There's many people that are doing this, and it's a well-kept secret only for the fact that the banks don't make as much money off of these as they do off a traditional mortgage, because a traditional mortgage is amortized where you're paying the interest all up front, and then when you get to the end, you're paying more of the principal. Well, it flips that on its head, and you're not following that amortized schedule. And so the money that's sitting in there is driving down your daily interest accrual and helps you to pay off your loan between on average 5 to 7 years. Some people it takes 10. It depends on your situation. But it's an amazing thing. And this company will give you the education to teach you how to do this, to teach you how to get this loan set up, because there's pitfalls that you could fall into when setting these up. And the mortgage or the banking industry, the financial industry, a lot of people don't even the people that are in the industry don't even know about these loans, because the banks don't make money on them, so they don't do loans on them very often. And so you have to find the right person to talk to know to be able to get anywhere with this. Well, they have done research across the whole country, and they give you, after you're done with a little bit of education that doesn't take very long, they give you their research that says, okay, here's all the banks in your state, and here's what they have to offer, and it gives you a bunch of information. You just call the bank and you go through that questionnaire that they also give you, and you get those questions answered, make sure nothing changed, and then you move forward with your loan. So that's one of the products that they offer. They have many ways and many different things they teach you that also speeds up that process, so that helps you pay off your house even faster by using other options to be able to keep your money in there as long as possible. So that's one thing. The other thing is called infinite banking concept, and so what that is it's using a type of life insurance that's kind of has, some people have they've got a bad taste in their mouth over it because they've heard bad things on the radio about it, but it's actually a really cool thing, because that money sits in your account, and you're taking loans out against the company or the life insurance company that your policy sits under. Instead of pulling your money and getting a loan, you're getting a loan from the insurance company while your money sits in your account still and compounds interest. Where if you did a saver mentality, and I saved up for a $10,000 vehicle and I paid cash for that vehicle, that money is now gone and it doesn't work for you anymore. Where this other way of doing it, your money will continue to work for you. And there's a lot of education behind it, but it makes sense. So anyway, if you're interested in learning more, and I highly suggest that if you have a mortgage, that you really take the opportunity to look into it. The other thing that I forgot to mention is most places, almost all really, when you go to get a home equity line of credit, there are no closing costs. The bank pays all the closing costs, where a traditional mortgage, you're paying for that. So there is a cost for this program, for the education. Obviously, they're a company that needs to make money, but there's a way that you can basically use credit. You can pay for the education, then you get your loan closed, and then you use the equity that you have in your home to basically pay off that education. And it's less than what you would pay for a traditional closing cost and a traditional mortgage. So you're actually ahead, and then you have it all in place, and you're just moving ahead farther and farther as you go through this program because you're paying your house off even faster. So it's worth it. It's worth the investment, in my opinion. So anyway, I've left a link in below. Go ahead and click on that if you want to learn more, and good luck. Thanks. Bye.